So, everybody, thank you so much for joining us today. If you haven't been to a previous webinar, my name is Savannah Shelnut. I'm the Ag Climate Resiliency Specialist for the Hudson Valley. We're joined today by Kitty O'Neill. Kitty is the statewide Ag Climate Resiliency Specialist, and we're really excited to have Elizabeth Higgins here today. She's a farm business management specialist with the Cornell Cooperative Extension Eastern New York Commercial Horticulture Team. And she's going to be giving us a great presentation today, and I'm going to go ahead and hand it over to her so she can get started without further ado. Thanks so much for joining us today, Liz.
Well, thanks for having me. And so I think let me just get the thing started. I assume you can see that, right? My talk is luck favors the prepared and federal insurance for natural disasters on farms. I'm Liz Higgins again. I'm an ag business specialist. And I want to make it clear, I'm specifically going to be talking a little bit about crop insurance and flood insurance, which are both federal insurance programs, because you can pretty much insure anything. And there's tons of insurance that I will not be talking about. So it's a little bit more limited thinking about natural disasters. So the first thing is like, when I say a natural disaster, what am I talking about? I'm talking about weather or disease, related events like drought, floods, and with this, a lot of, I work in fruit and vegetable production, and because of irrigation needs and things, a lot of the farms that I work with are located in floodplains, which often has really good soil, but also puts you at risk for, flood disasters. Snow and frost, are also can be real problems. I know in a lot of the orchards I work with, frost in particular been a huge problem the last few years in grapes and in apples. Snow loading, if you have barns, it also can be, an issue. Pests and diseases, especially those sort of pests that are, where there aren't good treatment options, or disease when, because of some other related weather event, you end up with just disease pressures that you really, you can't control under, sort of normal circumstances. And then there's other things that are covered, animal or plant quarantine, if you have to destroy animals or plants because of, some sort of a quarantine to control a pest or disease, wildfires, prevented planting, because there's too much water or temperatures, winds, and they're more extreme version like tornadoes. And then, sort of issues for some of the insurance programs where we have marketing issues due to grade, quality issues because of these other disasters. And then those market impacts of weather. So if your markets, especially for some of the crop insurance programs, if you start seeing lower revenues because there's been just, unseasonably bad weather, and it really is limiting your ability to market. In some cases, those could be things that are covered, although that's a little rarer. So the first thing, though, before I launch into insurance, is, if you're thinking about your farm and you're thinking about your farm business, really the first thing you want to do is really start thinking about what are your natural disaster risks. Because in some cases, insurance costs money, prevention costs money, and you're trying to allocate your resources in your business. You really want to sit and think about, am I really, vulnerable to frost because of the crops I have? Am I vulnerable to flooding because of my location? Do I have a very narrow window for planting such that if planting is prevented, I won't have a long enough growing season? So what are my risks? What's likely? What could be devastating? There are some things that are rare, but should they happen, like if you're a livestock producer, and this happened in our area, and you're in an area where there's a lot of woods or whatever, a wildfire could be devastating if you lost all of your animals and you hadn't really thought through how you would get them out safely. And then what can you do? And I want to really emphasize here economically, right? Nobody expects you to do things that are, so expensive that it's no longer economical to be in that business. once things get to the point that you can't economically protect them, I mean, it probably is time to look at something else. But what can you do to reduce natural disaster risks? Because even with insurance, even with disaster programs, even with these things, the more you can sort of prevent the problem from happening, in the long run, you don't have that business interruption, you maintain your markets, you're a lot more stable. So in the case of orchards, people put up wind turbines, at cost because to reduce frost and weather events. Do you choose the varieties that you plant to be, more disease resistant? Do you, practice some conservation practices maybe to reduce runoff? Do you really look at hurricane, putting upgrading maybe some of your buildings to make them more wind resistant or snow load resistant? So really thinking about what you can do that that's reasonably affordable to reduce those disaster risks so that you don't actually need to make an insurance claim. You don't need to hope that there's a disaster program. And as I said, these management practices, infrastructure upgrades, and then financial preparedness, right? Can you get a loan? Are you diversified? Maybe through diversification, you're reducing some of your risks, or having a savings or a line of credit in advance would mean that you would be able to get sort of started up again without, because it could be like after you've had the disaster. I mean, we do have some federal programs that make lending affordable, but it's a lot easier to apply for a line of credit before you've had the disaster. Well, things are still going well. Like once the crisis happens, it becomes harder to do these things. So preparing in advance. And then the last thing really, and that's what we'll insurance, and so insurance really helps to cover those things that you can't economically do through management, infrastructure, and other types of preparedness. So, what kind of assistance, if something were to happen, if there were to be a flood, if there were to be a drought, if there were to be something on your farm that is a natural disaster, what can you expect for help? I think sometimes, especially people who are newer, who haven't had a disaster, overestimate how much federal assistance there will be if something really goes wrong. I was in Louisiana during Hurricane Katrina. I was here in New York during Hurricane Irene. And a lot of people, had lost a lot of things. And those were even with major federal disasters that didn't receive a lot of assistance because of maybe specifically their situation. So it's good to be realistic, I think, about how much help you can expect after a disaster from the federal government. And in the case of agriculture, USDA Farm Service Administration is the agency that is really tasked with disaster programs, disaster recovery. They tend to be the lead. And there's 4 types of disaster programs. And you need to have some type of declaration or designation in order to trigger sort of the payments from the federal government. So the first type is when the Department of Agriculture, the secretary makes a designation that there's been a disaster. And in agriculture, this is the most widely used, and I'll talk about it a little bit more. The next one would be a presidential major disaster and emergency declaration. And that's when FEMA tends to be lead. Those are like major hurricanes, there's widespread devastation to infrastructure and stuff. So it gets, the losses are over a threshold such that it becomes a major disaster. And then there's a couple of others, physical loss notification. So like buildings destroyed by tornadoes, livestock related losses. I haven't really dealt with those really at all. And then quarantine designations under the Plant Protection Act or animal quarantine laws. So when there was the avian flu outbreaks, and so a lot of the animal people who had poultry, especially laying hens, I think a few years ago in Iowa, had to destroy flocks. There's some programs out there to provide some compensation to growers because of a quarantine that, to help sort of make them whole after those sort of losses. So I'm going to focus on the secretarial designation and process because this is the one you're most likely to see or maybe have experienced. So the Secretary of Agriculture designates counties as disaster areas, and they do this in order then to make emergency loans available to producers. Until there's been a disaster, those loans aren't available. And so those producers who've suffered losses in the counties or the counties that are contiguous to the affected county. And then in addition to that, other emergency funding and the disaster assistance programs can be available too. So the first thing that happens is this designation. But it doesn't, not every single event or bad weather event will result in a designation. The first thing that needs to happen is there has to be like a 30% production loss of at least one crop or whatever, or some type of determination made. And so one of the things that's really important as a producer, and the reason I want to bring these sort of things up is you're a grower, and let's say you have like just, really unseasonable weather, you've had this frost, you have this standing water in your fields. The first thing you should do is contact FSA and let them know you're having these losses because, in order to trigger these sort of thresholds, FSA needs to be aware that people are having losses and be able to count the losses to reach that 30% threshold for a crop. And if nobody ever let FSA knew that they were having a problem, it would be very difficult for the agency to determine that there is this type of situation. So, so they make this determination. Somebody requests the county makes a request in writing to the county offices start to collect data on the losses, in order to show that there was this level of loss. And then they make a review of the, at the county level, whether or not these losses occurred. And then the state board reviews that to determine if they support the recommendation. And then the national headquarters reviews it. And depending on whether or not it meets the threshold, the secretary then would make the designation. So the one thing that's important about this is to understand is you can imagine with this many steps and this much process, emergency, these declarations do not happen overnight. This is a process. And so you could have a weather event that results in a loss, a significant loss, and it could be 6 months or so before the loss, becomes a disaster, considered to be a disaster, and therefore funding is available. So, so as a grower, even with these federal programs, you still need to have something in place, some plan in place to tide yourself over until other funds, until these sort of federal funds become available. And that's why things like, the line of credit or savings or even preventing some of the problem to the extent that you can is really important because, federal funding does not flow very rapidly. So there will be some lag time before resources are available, even if they do become available. So then there'll be the disaster designation, and it'll specify what counties are eligible, what the disaster was, and when growers need to apply by in order to receive loans and and other assistance if that disaster does trigger other assistance. And so the first thing is that most disasters, federal disasters, whether they are FEMA disasters or agricultural disasters, the primary form of assistance from the federal government is loans. It is not grants, and it's not, loans are so if there is a disaster, the most likely assistance you will have is access to credit. And that's just something to be aware of because if you can't afford to take on more credit, that could be, the program might not be that helpful to you. And so, so whether or not you're credit worthy, what will be things that the government will also look at, especially for the agriculture programs. Besides the loan programs, there are other specific disaster programs. I don't know the livestock ones that well because I mostly work in fruit and vegetable production, but there's a forage program if you've got grazing losses due to drought or fire. There's an indemnity program if there's livestock deaths due to adverse weather or by grizzly bears or wolves or whatever. There's a program to compensate you for those animals. There is a emergency assistance for livestock, honeybees, and farm-raised fish for producers. I think that's to help bring food in for feeding costs is one of the uses of this program. And then if there's a significant disaster that results in like flooding where there's like debris all over farmlands or gravel on farmlands or a lot of scour, often like during a major flood or a hurricane, there's a program, the Emergency Conservation Program, and that can help provide some cost share to help get your land sort of back into shape for farming. And so that's important because I'll talk about flood insurance later. Flood insurance only covers structures. It doesn't cover land. So programs like this emergency conservation program would probably be only one of the few programs specifically for disasters that helps to put farmland back into place. But once again, it is also a cost share program too. It won't cover 100% of your costs. Tree assistance program. I work with a lot of orchard and grape producers. This is to replace trees that have had mortality due to a natural disaster, maybe a hurricane wind event or some type of wind is often one of the major causes for this. Could be a fire or something. But you have to have 15% mortality in order to trigger this program. And then it provides some cost share to replace those trees. So the big program for fruit and vegetable for crop producers, although it does provide some livestock coverage too, is what they call the Non-Insured Disaster Assistance Program, and that's FSA. And it covers non-insurable crops. So and I'll talk about this when I get to the crop insurance. Federal crop insurance is not available for every crop in every location across the US. And so they've developed this program through FSA that it covers producers who have a non-insurable crop when there's low yields or loss of inventory or prevented planting due to a natural disaster. You don't have to have it be a federally designated disaster. You just have to be able to show USDA FSA that there was an event and it had this impact on your farm. But the key difference between this program and all of the other programs I just talked about is that you have to actually produce NAP coverage for the crop year. So you will not receive this program payment most of the time unless you have purchased coverage. Sometimes if there's a huge disaster, a major flood or a major event, there have been times where USDA has allowed growers to sort of retroactively buy NAP. But in general, in order to receive this coverage, and know that you have it, you have to purchase it at the beginning of the year, beginning of your growing season, and have a contract in place before you have the thing that you're covering. Because so it's sort of like crop insurance. It's technically a disaster program, but it has elements of crop insurance. One that you have to buy it in advance. And then there's two levels. There's the basic level, and that's catastrophic coverage. This is the traditional sort of disaster program. It covers losses that exceed 50% of your expected production, and it gives you 55% of the average or whatever that contract price is. So if you were growing corn and you had NAP coverage and a flood came through and you lost 80% of your crop or 100% of your crop, they would pay you for up to 50% of that expected yield at 55% of the price that you'd agreed on in the contract. And the only cost to you as a grower is $325 a crop, or $825 per county if you have multiple crops. And then there's a maximum if you're in multiple counties with multiple crops of $1,900. And that would be for the catastrophic level. But then you have the option with NAP to buy up to cover higher levels. So, you can have losses of up to 60, you can buy for up to 65% of to cover, any loss below 65, below 65% of your expected yield. And that price for NAP buy-up is based on a formula, which is the number of acres you're covering, the approved yield for that crop, the coverage level you're selecting between 50 to 65%, that average market price that is sort of determined by FSA, and then there's a fee of 5.25%. So it's fairly straightforward to figure out how much NAP will cost you if you decide to do the buy-up. In general, I've done some research on NAP, and you're more likely to receive a payment if you buy up. But in general, even at the 65%, you're not, it doesn't tend to pay out a lot. I would say I would highly recommend most growers looking at the catastrophic level of coverage, because it's relatively inexpensive. And if you have a major disaster on your farm, a flood or something that really you have just a full crop loss, it will give you some return for not really a lot of financial outlay. And then, if you're a beginning or a limited resource farmer or a socially disadvantaged farmer, a qualifying veteran, actually that catastrophic coverage is free. There's a waiver of the service fee. And if you decide to do the buy-up, there's a 50% premium reduction. So this program is definitely very affordable, especially to those beginning farmers. And I think, we're limited resource, and those often do tend to be the growers that don't have, especially beginning farmers, a lot of sort of built up equity or capital, to be able to recover from an event, some type of disaster. And so the NAP insurance, I think, could be for a lot of growers, although it doesn't substitute for actually having, your normal year. It can provide at least enough money to sort of pay off some debt and and have some resources to start over again the next year. So, because I think the thing that's really important is the intention of disaster aid is to really help tide you over. It never will be a full replacement for your lost income or expenses. So it's really important, I think, to be realistic about what type of level of recovery you're going to have. And then the other thing is, no matter how bad your situation is, if a disaster is not declared, there is a chance there may be no disaster aid available. Disaster aid is not, as I said, not for every single program, but usually it's based on passing some level of, like, within a region, within your county generally, loss threshold based on either population, the value of the loss, the scale of the loss. And so if you're the only person who had a loss and the loss was big to you, but by the larger scale, it doesn't really trigger any sort of federal disaster aid. It's really bad for you, but there really isn't going to be a lot available. So the other option in that situation is to really think about federal insurance for natural disasters. And I think, like all insurance, you always have to sort of say, like, what are my risks? How vulnerable am I? I think an easy to understand way of thinking about it is life insurance, right? Like, most of us don't expect to die. We don't really, especially when you're younger, you don't have a lot of, most people are reasonably healthy. But there are stages in your life where, should somebody die, that would put an undue hardship on the rest of the family. And so having life insurance, might be really affordable, or, because the risk is low, but the costs would be high if you didn't have it. But at a different stage in your life, like say you have no children, you've paid off, you don't have any debt, if you were to die, there really wouldn't be a hardship. So you're sort of in the exact same situation where you've got this loss. But the question is that loss something that you can recover from with your own resources, and you don't need external resources? Or if you suffered this loss and you didn't have any external resources like an insurance payment, would it be difficult or impossible for you to recover from it? And that's really the sort of, when you think about how much coverage do you need, what do you need to cover, when do you need to cover it, you really need to think about how vulnerable are you, both because of what you're doing, but also because of your family and financial situation, such that insurance is something that you really should consider, just in order to ensure that the business is sustained in the event of a disaster. But there's a price at which, obviously, it's not worth it. And so those are things that you need to consider. So these two programs, crop insurance and flood insurance, have a lot of similarities, even though they're run by totally different agencies. The first similarity is they're both, even though these are federal insurance programs, they're funded by the federal government to recover, to help provide protection for events that, where other mitigation strategies may not be economical. They're both purchased through private insurance companies that have been licensed to offer these products. And so because of that, the rates for both programs, both flood insurance, federal flood insurance and federal crop insurance, are set by the federal government, not by the insurance companies. So when you're selecting an insurance agent, you're selecting for service, not for price. If you were to go to different insurance agencies and different companies for the same exact situation, you should receive the same exact price. So you're not shopping based on price for crop insurance or flood insurance. You're shopping for somebody who seems knowledgeable, knows the industry, and can sort of help guide you through how to respond to the disasters, and will be there when you need them, and understands your crop or your situation. But you're not really going to get a better financial deal by going to sort of the cut rate insurance company. The other thing is that these are both not necessarily available everywhere or for every situation. The disaster programs are sort of like, if you're in a federal disaster area, and you qualify, you get it. You can want crop insurance, but for some crops in some counties, it's just not an option. And that's why they have the non-insured program. And there are some situations where flood insurance isn't available. Maybe it's too risky a situation, so it's not insurable. Maybe your community doesn't participate in the National Flood Insurance Program. I think most do, but it's not necessarily true. And then federal flood insurance wouldn't be available. So you can't, you can't necessarily assume that just because you want it that it's there, but it's there for in many situations. Both may be required by lenders for federally backed mortgages or loans. So if you have a federal, an FSA loan for your farm, they may require you to they likely will require you to get crop insurance if it's available. And if you have a federally backed mortgage on your house or on your infrastructure, you may be required to get flood insurance if you're in a high-risk flood area. So there are times where these programs are required. And then finally, they also may be required if you have received federal disaster payments in the past. So if you didn't have the insurance program and you received a federal disaster payment, either a FEMA payment for a flood, or this federal disaster payment for a disaster program, that there may be a requirement that you can't get another payment if you don't have insurance in the future. So those two programs are very similar in these areas. So flood insurance, you can find out more about it with floodsmart.gov. And I'll be honest, I haven't worked with the flood insurance program in quite a few years. So my information will be a little bit more general rather than specific to the programs. But one thing to consider with flood insurance is that a lot of times people are focused on required to get or focused on these floodways, these really high risk flood zones. But in general, people outside, just because you're out in not in a flood area, high risk flood area, doesn't mean that you won't have a flood. They said over 40% of flood insurance claims and 1/3 of federal disaster assistance for flooding were outside the 100-year floodplains. I saw this when I was, when I've worked with flooded people who are flooded. A lot of times, you can be away from a stream, but the water's coming down off a mountain and gathers right there. The way roads are designed, sometimes, storm water can pool up, especially when there's a really huge weather event in a short period of time. Drainage issues, stormwater issues, runoff issues can all contribute to flooding on your property, even if you're not actually in a federally designated, 100 high risk flood zone. So, so you may want to think, find out if it seems like, you could, if you're in a low area, if you're really vulnerable, if you feel like, this is something that you've got really valuable infrastructure or something, this is something to consider. So flood insurance covers very specific things. And flood insurance is important because most homeowners policies, or your policy for your buildings or whatever for your farm probably don't cover flood damage. Flood damage is often excluded from many insurance policies. So flood insurance, with the expectation then that you'll get flood insurance. For buildings, it'll cover your electrical and plumbing systems, your furnace and water heaters, your foundation, your buildings, essentially anchoring systems, fuel tanks, detached garages, and you have to insure every building separately. And then it'll also, you can get content coverage. So if it'll cover for a farm, non-licensed self-propelled vehicles like tractors can be covered for flood insurance. Your stock, your inventory, your materials that could be lost in a flood, furniture, fixtures, stuff like that. So if you're in a high risk area and you've got a lot of inventory, a lot of resources, flood insurance, you might want to check your insurance policy, see what would be covered if there was flooding. And if you're not covered for flooding, especially if you're out of a flood zone, flood insurance might actually not be that expensive. They tend to try to make it relatively affordable for people who are encouraging people to buy it who are outside of the flood zone, just in order to be so that when there's a major disaster, they have some protection. So the one I really want to focus a little bit more on is crop insurance. You can see in the US, the dark red areas are where, a lot of crop insurance is purchased. Orange areas are like a little lower, yellow is lower, than white are counties where no crop insurance has been purchased. This is on last year's data. You can see it's very heavily used in the Midwest, on the West Coast where there's fruit, a lot of vegetable production and livestock. Florida, where there's really high value vegetable and fruit production and really high risk due to hurricanes and weather events. When I talked about earlier with crop insurance, that not all crops have an insurance plan in every county available to them. These are the crops in New York here that have a federal crop insurance program specifically for them. So those would be like apples, barley, cabbage, corn, grapes, hemp, oats, and pears, potatoes, processing beans, soybeans, wheat. The main commodity crops are generally covered. The key thing there is even though they're covered in New York, like grapes is a good example, you can't get grape crop insurance in every single county in New York. It tends to be focused on those counties that are the major production areas. And so you can get a sense of like how many acres are insured in New York, and what percentage of the crop is covered. So like 91% of processing beans are covered by crop insurance, but only 57% of apples in New York are covered by crop insurance, because a lot of people are producing apples in areas in counties that are not covered by crop insurance, where it's not available. They have maybe smaller acres and more direct market apple producers. Then there are what they call pilot programs. There's a bee program, apiculture, pastoral rangeland forage, the micro farm, and the whole farm revenue protection. Those cover the revenue on your farm rather than the crops. And these are all available in all kind of dairy revenue protection that also protects that you're ensuring your revenue as a dairy farmer. And those are available in all of the counties in New York. And then there's a couple of programs that they call them dollar liability programs. These are not protecting yield. These are protecting, I think, the cost of that specific infrastructure. So the value of a swine, the value of dairy cattle, the value of the nursery products. Those are, and there's also a tree program that for some reason wasn't mentioned that covers like the replacement cost of a tree for apple orchards or for vineyards. And those are available, I think, statewide too. I don't tend to know the livestock. I just have the livestock programs as well. So in general, with crop insurance, for most of the programs, there's two levels. Again, there's the catastrophic, like I mentioned with NAP, where you only pay a service fee. And for the crop insurance programs, that's $655 a crop. And then that premium is 100% subsidized. So it's just a service fee. And like NAB, it covers, losses in excess of 50% of your yield or the value at 55% of the contract price election. And it's not available for whole farm revenue or whole farm micro programs, but it is available for most of the other crop programs and livestock programs, I think. Then you can also choose buy-up protection, and that's where you cover higher levels of your yield from loss, and you get 100% of the contract price. And for these, the premium is subsidized, so there's a higher federal subsidy at the lower buy-up levels, and then that subsidy declines as you cover at higher percentages of coverage. So crop insurance is the growers are it's sort of a agreement between the federal government and farmers, because the federal government covers part of the cost of the actuarial cost of the insurance, and then the growers cover the other portion of the actuarial cost. So it's, for some crops it can be quite affordable. And I know that crop insurance has been a high priority for USDA in the last few years, trying to make it more accessible and more affordable to more growers and more responsive to their needs. And so the other question is, is it affordable for beginning farmers, veteran farmers or ranchers? And these are often, as I said, people who, the losses, especially, if you're a beginning farmer, having a complete crop loss could be devastating because you haven't built up, you don't have a lot of reserves. It's, they've made it that they've waived the service fee. So if you got the catastrophic level, once again, that would be essentially free. And then they also offer a premium subsidy for additional coverage. So they are trying to make at least the catastrophic level very affordable to beginning farmers and veteran farmers. And so you also would file this, you'd file this declaration with USDA, and that would trigger your ability to get the discounted crop insurance. So the keys to success for all of these programs, a lot of the barriers I hear to participation is lack of records. So really good record keeping, sort of documentation of what you have, documentation of what its value is, for whether it's a disaster program, flood insurance, crop insurance. Keeping and maintaining good records will make it more likely that you will receive the maximum payments that you're entitled to. But another thing is just really good communication with USDA, FSA, your local elected officials, your insurance agents. When you have a problem, when you have, a crop failure or a disaster happens, a weather event happens, letting USDA, FSA know that you've had this, letting your insurance agent know as soon as possible. Is really important in order to, really documenting what is happening on your farm and making it more likely you'll receive whatever assistance is available. There's very little, there's really a lot of benefit to you for sort of keeping good communication with those groups so that they also especially FSA, the more if you're working with FSA with loans and with other programs, the more they know your operation, the more they'll be able to help you out too in these situations. And then the last thing, is really good documentation of losses, having time-stamped pictures, because especially with floods, the waters can go up and they can recede really quickly. Timestamp pictures, trying to capture maybe that sort of mark, the mud mark or whatever, trying to like document like what was the highest flood stage. So, because that can determine, whether or not your crop is going to be saleable. Everything might look fine, but it could be if your plants were underwater for too long, they might not be marketable. They would be more vulnerable to diseases. Having good harvest records, having good sales records, getting letters, from Soil and Water or Cooperative Extension that document the local event and your practices can be really helpful too. Because a lot of times, there's, especially if there's a larger event, and local insurance people are overwhelmed, FSA is overwhelmed, having that sort of backup documentation, can be really important by the time they're able to really focus on you and your situation. So with that, I guess I'll turn it over to questions and I'll stop the sharing.
All right. Thanks so much, Liz. That was really great. Okay, folks, if you have any questions, please stick them into the Q&A. But I'm going to start off with a question that I myself have. So Liz, I know you mentioned that animal quarantine or loss due to disease can be a qualifying disaster. Has any assistance been released for folks dealing with the highly pathogenic avian influenza epidemic in New York?
Since that is an unfolding situation now, is my understanding, right? Because I would imagine that if people are being asked to destroy animals or losing animals because of that if it's, if the losses are, as I said, I don't work very closely with livestock, but if losses are get up to a certain level, it's likely that there would be a declared designation. But I would certainly make sure if you're a grower that you keep records and that you contact FSA to let them know what your losses are so that that would help sort of move the designation process along.
Great, thank you. So we have a question here from John Whitney. EWP requires local, municipal, or tribal sponsors and local match watershed scale disaster recovery assistance through NRCS, and then he links to a site. EWP buyout option increasingly important with increased frequency and magnitude of extreme event. So maybe that was a comment there. Thank you, John, for that website.
Yeah, when I was working with Irene and Lee in this area, the emergency watershed program was really important. And I think that is, and that's when I said, as a grower, communicating with local officials when you have, if you have something on your property after a flood or, some type of related weather event, hurricane or whatever, being in contact with your local municipal official is really important because they are also the ones that will help to push for these programs to become available. And you may be reliant on local match for those, and the communities may be able to come up with them if it's through economic development funds or other funding.
Great, thanks, Liz. So I have another question for you. So you mentioned that in some areas flood insurance is not available. Do you foresee that with the increase in flooding events that we're anticipating here in the Northeast, that some areas will no longer qualify for flood insurance? And if so, do you know if folks that are already participating in the flood insurance program will be grandfathered in and kept, or will they be cut from that program entirely?
So, and this is as I said, this is an area I don't follow flood insurance as closely as I used to. The primary reason why flood insurance wasn't available in some communities is because the communities needed to participate in the program. They need to say that we will have, we will our zone, we will not allow building in floodways, right? Like we will have we will sort of follow the program, and then flood insurance then could be available. And so most, I haven't really encountered a lot of communities that aren't members, but it's possible. Like I can't say that there isn't a community in New York. Um, I don't know that we will see communities like not being allowed to participate. In general, if a building, like if a property has repetitive losses, it could be that after a point in time, it won't be insurable anymore. But generally, those properties then become eligible for when they have buyout. There's other programs, right? Like there's buyout programs and stuff to try to get those repetitive loss properties sort of out of, like no longer have structures on them that would need insurance.
Great, thank you. Does anybody else have any other questions before we let Liz go here? Give a few more minutes just in case someone wants to type something, or if you would like to unmute yourself, you can raise your hand and I can allow you to talk. All right, well, I think we might be all good then.
All
Liz,
right.
thank you so much. Really appreciate it. Everybody, thanks for attending this session, and our previous sessions will be posted on YouTube and in podcast formats. Keep an eye on your emails if you missed the previous one. You can go back and catch up on them later. So thank you so much, Liz.
Great. Thanks, Savannah.
All right, have a good one. Bye.